You don't need to. You don't
Okay.
need
All right. So, welcome to Credit to Keys. Today, we are going to be talking about the road to home ownership and qualifying for a mortgage, and what that takes, and what you should be doing to get your credit ready to buy a property. So, basically, what we're going to do is just help you to break down, credit, anything that, any myths that are out there. Just want to simplify it and make it easy for you to understand so that you are ready to go when it comes time. So, and we have a special guest on with us today. Miss Barbara Winters is here. She is with Highland Mortgage, and she is a very skilled mortgage banker with many, many years of experience on her under her belt. So, Miss Barbara, did you want to just give us a little intro real quick?
Yes. The first thing that I want to say is welcome to the call, and I really appreciate you having me here. One of the things that I want to say is we have to look at credit as we analyze credit, since that's what we'll be discussing. If we're not 100% there, credit is kind of like exercise. It's building muscle. And this is not something that's done overnight. So if you are, you have the desire to buy or invest or anything like that, now is the time to pull your credit report. It's in the beginning of the year, and to analyze it to see where you are. That is most important before we get into all the ins and outs. I think that that's the very big step, and that you know that you're serious about it. So I'm gonna turn it back over to you.
Right, right. So yeah, filling your credit report is one of the very first things we were going to talk about, and that's the first step in really knowing where you are, whether you're ready now or 3 months down the line. You got to know where you are, what is your starting point. So we are going to dive into that a little bit. So where do you get your credit score? Where is the most accurate information to obtain your credit report? We know about all the Credit Karmas, and there's different sites that are all going to give you different numbers. So we are going to discuss today from a lending perspective, what are they looking for? What reports are they using? And so that you can know and you are, equipped with that information, and you don't think you have something that you don't. So, and you're getting false information. So we're going to just go into that a little bit. Ms. Barbara, where would you direct a buyer who's wanting to know their credit score in the most accurate form and as to what you guys are looking for?
My preferred is my FICO, but you can also go to free credit report. You can get your annual free credit report. You can get all three bureaus. With my FICO, we look at the one for home financing or HELOCs. And that's very important because you have different FICO scores. And that is going to give you the most accurate one that we would look at,
Okay.
and then we would analyze that. And that's very important that because for the most part, a lot of people pull different credit reports and they'll say, "Well, this is my credit score. This is what I saw," and that may be for credit cards or maybe for an auto loan or something like that, but not for your housing. So that's the difference, and you need to understand that.
Okay. So basically, rather than going to, Credit Karma or Experian or one of these others just to get all these different numbers, you're advising to go to, to get your FICO score. That is, important. And you can go to my FICO, sign up for
Mhm.
an account there and get your FICO score, because that is the score that most mortgage lenders are going to be using, right? Because there's FICO and then there's the Vantage score. So two different scoring models, and different lenders or platforms may be using different things. But in regard to mortgages, your FICO score is something that you're going to want to know. And if you go to myfico.com, you'll be able to get that information and have a clear picture. I do believe they have a free version, but there's also, but you're only going to get limited information. So if you want the full picture of, see everything on your report, you're going to need to get the paid model for that. So my FICO is what you're going to look at. So that's really good information. And specifically, Barbara, they're going to want to request their mortgage score if they go to any of those other sites like Experian or so. They use FICO. but there's different FICO numbers. So you're going to want to request the mortgage score so that because what you're seeing could be for credit cards or auto loans, like she was saying. So make sure that you are requesting your mortgage score to get the most accurate and up to date. Like what would you need to see in order to get qualified for a loan, a mortgage? So that's really good. So that's a great starting point. It's 2026. Everybody is journaling and getting their business plans and everything ready, figuring out their life for the year. So start with, if you're interested in buying a home this year, a good place to start is getting your credit report and getting the most accurate version of that, so that you can at least know what you're working with. And speaking of credit reports, once you kind of are there, Barbara, what would you say they should be looking at? What scores? What things should they try to aspire to when they know what the actual score is?
Okay, so and I'm going to speak on, like the FHA and VA, most lenders want at least a 580. So with the 580, a lot of times there's going to be higher pricing. I don't want to really get into that because the pricing, your credit does determine the rate that you get. There are adjustments that's done. It's not something, it's just an agency thing that happens. So the better your scores are, the better, sometimes your rate is. It just depends. I do want to say that. So 580, is normally the minimum that most lenders will accept. For conventional, it's going to be 620. For USDA, it's 640. So it depends on which program that you're trying to get qualified at. That's going to be the credit score that you need, for that requirement. And your lender will let you know that.
Okay. So 580 for FHA and VA, somewhere around in that is like minimum. And then conventional is 620. And if you're trying to do USDA, you're looking at somewhere around the 640 range.
Yes. And even when you're trying to do down payment assistance, because I know sometimes people want down payment assistance, depending on the down payment assistance, they may have a requirement too. And I'll just use Georgia Dream. Georgia Dream requires you to have a 640 FICO. That is a requirement. Now, some of the other down payments, it may vary, but most of them do require a minimum, FICO score.
Okay. So all good information, knowing the score and then actually knowing what range you're in is helpful and a great starting place if you are looking to buy a property this year. I will say, once you have that information, there's other things that you may notice on your credit report, and we're going to kind of talk about those things and how to handle negative items. So for example, if you have any collections, bankruptcies, things of that nature, we're going to go into a little bit detail. If you are experiencing some credit challenges, what can you do to position yourself to get yourself ready for a mortgage, even if you're having these challenges? What tips and tricks can these buyers use to get qualified? So we'll start with, for example, collections or any derogatory things. How do you guys look at that from a lender's perspective, and what should someone in that situation be looking to do?
Okay, so most of the time for collections, because we run everything through the automated underwriting system, that it will advise us, what they want to see with that. So for the most part, I recommend with collections because sometimes collection can, make your credit score drop. And a lot of times these lenders, these creditors, these collection agencies, they will negotiate with you. I would at least, reach out to them. Sometimes they'll, write 60% of that debt off. So if you're saving up and you put money aside, I think that would be a great thing. But you always want to get it in writing from them up front. And sometimes even once you pay it, they will agree to remove that off of your credit report, which is a plus, and that can increase your score so much. So always do your negotiation up front. Make sure they give it to you in writing, and then that way, you can help settle that debt. So as a lender, it depends on which program that we're doing, like with FHA, a lot of times if you have collection accounts and they're over, like 1,000, we add 5% of those, and that's collectively. So you may have one for 200, you may have one for 500, you may have one for 800. So if we see that, we're going to start using 5% of that to include in your debt to income ratio. Now, if your debt to income ratio is already high, that could be a potential problem. So that's why it's important to pay attention to those collections.
Okay. So just to recap, we're going to reach out to these creditors if we are in collections or, in any other derogatory things on our accounts, card drops, what have you. We're going to reach out to these creditors to work out some sort of negotiation with them and always get that in writing so that we can try to get the items removed if possible. So this is a way you can kind of work on things on your own without having to go through, these different credit people who, are going to, maybe or maybe not be able to do, remove these things from your credit. So this is a way for you to, as the buyer, take ownership of your credit report. And, if you're looking to do some things on your own, this is something that you can do to get your score, raise your score. So like she said, reaching out to these collections, working out a negotiation, and getting it all in writing so that if once it is paid off, that, it can be removed or whatever you guys can discuss, because ultimately the debt is going to count against you. You said once they hit $1,000,
Once they, right, we start
that
to,
threshold.
right, we start to look at that, and we would use 5%, of that, in your ratio. So,
Okay.
say sometimes your ratio is already tight, and
Right.
depending on the overall, that threshold is even lower. So,
Right.
we have to be very careful of that, when we're looking. And another thing I would suggest as you're reaching out to them, keep your folder. You could do your notes, on your phone or, on your computer, the date that you called them, keep up with that. And then that
Mhm.
way, when they say that they're going to send you something, check your emails, make a folder for all of that. Because once you start to do that and you need this stuff removed, it's going to become helpful for you. And you don't need to be going through everything. Just get organized with that. So, you'll be more clear and, and know what road you're going down. You'll know what was already negotiated. You already have it handy. Sometimes they'll say, okay, if you give it to me in 2 weeks, we will do this. That way you can look at when you get paid, and you can look and say, okay, I know I can be able to do this. And I just
Mhm.
think, now, with, now being tax season, people will get their tax returns, just think about those things. Think about
Mhm.
what's going to help you for your future.
Right. And ways to get that debt paid down so that you can have that not counted against your overall ratio
Right.
for
Buying power.
calculations.
Hmm.
Right. So, okay. And then, so in addition to that, people are often unsure about how bankruptcies, foreclosures work. So we can kind of start with bankruptcies for FHA, and
Yeah.
what are the guidelines on that?
Yeah, FHA, you have to be out of bankruptcy discharge for at least 2 years. With That's for Chapter 7. So let's be clear, that's on the Chapter 7. On the Chapter
Mhm.
13, you have to have been in a Chapter 13 for at least 1 year, and you can get permissions from the trustee. You can ask. I don't mean that they would give you permission, but if they do,
Mhm.
you can buy after you have made 12 payments on time. So those are the guidelines. With a conventional, it's normally 4 years. And so we're going to talk about foreclosures too. FHA is 3 years. With conventional, it's 7 years. So there's a lot of different things. We constantly look at guidelines. So it's best if you have any of these things on your credit report when you're speaking to your lender. Let them know that up front. That way they'll know. How to lead you.
Right. And it's very helpful. I think that not a lot of lenders are going to walk you through your options. And I think it's very important for you to have a lender like Barbara that's going to, if you are, inquiring about, purchasing a home and maybe you're not quite ready yet, she is going to be one of those lenders who's going to help you and get you to where you need to be, whether you're ready now or it's 3 to 6 months, whatever the case may be. And going over these things that we're talking about today and even more and in more detail based on your situation. So don't be afraid to reach out, to your lender and get that guidance so that you know exactly what is needed for your, eligibility and where you are. So, and that's another, just another tool for you to have so that you don't have to do this all alone. Now, we are giving you tools to kind of get you, more information so that you at least know where you are and where to start. But at some point, you are going to need to reach out to a lender to have them to look over your profile and walk you through what needs to be done, if anything, and let you know what the next step should be. So I think it's helpful if you have a lender that is, gonna not just push you to the side if you're not ready. They're moving on to the next deal. Miss Barbara is one that is gonna walk with you, help you get to where you need to be, as long as you can do the work on your end and utilize these tools that we're providing to get a hold of your situation, whatever that might be, so that you're able to, potentially buy a home. So that's very important. So if you have any of these derogatory things on your credit, don't feel like, you don't have options, because even
Yeah.
with the stipulations, 2 years, 3 years, 1 year for, chapter 7 versus 13, foreclosures, all these things are put in place, but there are ways that you can qualify sooner. You can, based on specific scenarios. And Barbara, can you kind of maybe speak to ways that, if they are on a program, what can they do to, help them get through it, maybe a little faster than just sitting back and doing nothing?
Right. I think the biggest thing is when people are on programs, it first is making a commitment to yourself. Once you make that commitment to yourself and you honor yourself, you'll be able to get through whatever program. And this may be, I suggest that you go through, your budget, and the reason that I say that is because a lot of times we do wasteful spending. Do you really need Netflix, Hulu, and all of that? That, those numbers right there, if you can cut off and just have one thing or cut them all off for a while. I know it differs from each household, because sometimes you have children. I understand that. But you have to look at the greater good and you have to say, okay, what am I willing to sacrifice to get what I need and what I want, to be able to build some generational wealth and just have some stability. Some people just want home ownership. And so that comes with sacrifices sometimes. You may have to look in the sales paper to see, what's on sale for food. You may have to coupon. There's a lot of different things that you can do that we just take for granted, because home ownership doesn't just come overnight when you have not prepared. So I just like to be real with people. Some people, be like, well, I don't want you trying to tell me, how to spend my money. And I know that those people are not ready. I know that they're not ready. You're not going to get there without a plan. You have to be very intentional about, this is what you want and this is what you want to do. Sometimes your kids won't be able to go to every birthday party. You don't have the money to buy gifts.
Right.
And, you have to make that sacrifice. You have to say no, because I'm sacrificing to put you in a home so that you can have some stability right now. And sometimes you just have to apologize, saying we won't be able to make that. So, again, I'm happy to sit with anyone who is serious about it. We go over it. I would go trade line by trade line with you and let you know what you need to do.
Right. And so, like, with regard to, like, say, for example, like some foreclosure situations or bankruptcies, I know that there's ways that they can work to rebuild their credit while they're in these programs, right?
Yes.
Like continuing to pay their bills on time, or like you said, reducing the bills that they have and staying on track with what they have on their current, with their current bills. So keeping that lowered and avoiding any new debt, things of that nature. So that's all ways that you're going to be able to, even though you're in this program, you're working towards getting yourself reestablished, right? So.
Right. And the one thing about the Chapter 7, because with the Chapter 7, like I say, for FHA, once you've been out of the bankruptcy, for, 2 years, you can go ahead and purchase again. But the thing about a Chapter 7 too is you don't have to wait because the Chapter 7 is discharged so fast. So you can actually, go and, possibly get another credit card, but you don't want to overextend, and you most definitely don't want to put yourself in the same situation. So you want to be very careful about that. Chapter 13 is a little bit different because it's over time. And so anything that you apply for, you need to get approved from the trustee. And if you're already making payments, 9 times out of 10, I would think that the trustee, this is just me, I don't know. I'm not a bankruptcy attorney or, not a trustee, but I would think that they're maxing out. They look at it, I'm quite sure they're looking at it like a lender would look at it. If you're already, paying a bankruptcy, why would we extend more credit, to you at that time? So you may have to wait. But the good thing about that is if you're making your Chapter 13, payments on time, that could be a possible trade line for you, once that passed because you've been making those payments on time. So, and, if we have to do a manual underwrite, we look at cell phone bills, we look at, light bills, we look at gas bills, but make sure you're making those payments on time. Make sure you're not getting a 30-day late, because if you are, we look at that, and a 30-day late is still a derogatory, account. So, just keep that in mind. Sometimes you may want to put those on auto to come out of your bank account so that you are paying them on time. And everybody's situation is different. Some people don't like that, but that's just a suggestion.
Okay. Sounds good. I think this is all really good information for beginners, or even, somebody trying to get back on track and get qualified again, and, just have a clear guideline and roadmap to how to get their credit back on track. So I know that one of the things that I said we would talk about as well is sort of like for those people that, maybe they don't have the credit, or they've only got like, one thing on there in terms of their credit. Like, how are they, in your eyes, how are they able to establish themselves and get themselves ready for a mortgage?
Okay. So people who only have one trade line, if that is your trade line, you're not an authorized user or anything like that, is your trade line, we take that as gospel. But it depends on how long you have had it. Most of the time, lenders are going to want to see that you've had that one trade line for 12 months. So if you're just starting off, you can still, do other things. Like I just mentioned, you can get your auto insurance, put on your credit report. You can get light bills, cell phone bill. Most people have their own cell phone bills, so you can get that put on there. You could, you can get a credit card, a secure credit card where, you have something in the savings, and it's like you're making a payment, you're running it up, and you're making a payment. But I suggest you don't run it up that much. Just put $30 worth of gas in there just to get it established until you can, get a credit score. And then once you do that, then you'll have other people that come and offer you, credit. The biggest thing is you don't want to max out these credit cards. And actually, right now, I'm going to say that it's a good time right now. The bond market is moving a little bit. Interest rates are, we're starting to see come down a little bit. So you don't want to miss this ride. So get yourself prepared. Talk to a professional. Just make sure that you are aligning yourself for what you want.
Right. And, like she said, length of time, is something that you're going to have to establish over a period of time. Now, how long would you say, Barbara, that if you, depending on timeline, so if they've had a credit card for a year, or, had the utilities and different other things added on there, and they've maybe had a year, or is it more like 2 years? Is there a time frame of length of time that you would suggest that before they...
I'm sorry. I have seen us take it, with at least 12 months. We used to say 2 years of credit, we know that that's really a goal. But most of the time, 12 months, that's enough to show us that, you are paying your bills and you are paying them on time. So I'm going to say 12 months.
Okay. All righty. And so this is all, for those that, like we said, have little to no credit, and you're just trying to build and get to where you need to be in order to qualify. And, adding your rental history, utilities, those are all ways to build credit, and also to boost if you're a little bit under the 580. Maybe you want to add on, do a boost and add on those utilities, your rental payments, and you can, maybe get yourself to a better score or get up to that 580 if you are a newer, if your credit is more established, but yet still needs some work, and these are, just needs like a boost, that's one of the ways that you can get the score up. And then again, talking to a lender who could also look at your profile and give you additional ways of how to boost your score based on where you are. Maybe you just need to pay down a couple things, how much you need to pay, when you should pay, any of those things. Do you have any suggestions on, time of month to pay or any of that stuff? I know that it all factors into how it gets reported on your credit. So
right. I think a lot of times that people pay it on their due date, which is fine, but you also have a statement date. You should pay on your statement date. And the reason being is because when you wait till your due date, you're missing like a cycle of when they're reporting. So,
Mhm.
even if you want to pay half on your statement date and then half on your due date, as long as you don't go past a 30-day late, that's
Mhm.
very important, because if you wait sometimes and then your credit is pulled and then you make a payment, your score probably would have been higher. Everything is about utilization. So just remember, you want to be at least 30% utilization on your credit card or more. The lower, the better. Installment, you're not going to get a utilization because those are installment payments, which mean that your payment is the same every month. Revolving is that your payments change each month. So just, be clear of that. That's very important. And even the people who are trying to rebuild credit, sometimes if you've been banking for a while, with the same bank, sometimes you
Mhm.
can speak with them. They may give you a credit card. They may offer you a credit card, because they're looking at your banking situation. They see that your banking is good with them, and you've been banking with them, over a year. Go, speak with a personal banker. They may be able to help you with that.
Right. And I know, like, for my daughter, she's young and she's trying to establish her credit. So she started off with, one of the secured lines and did that for a little while, and then, applied for a secured card. So, and did that through her bank, and that was, because she had that history with them, she was able to get qualified and get herself a credit card so she can establish, and, begin to establish history. So, I think that's very helpful. Again, knowing where you are and kind of having a great starting point is, crucial, and not being afraid to, talk with your agent, have them introduce you to a lender who is going to, work with you wherever you are, and, help you get to where you need to be. Putting the work in, getting, accurate information. It's all very helpful. So we are, wrapping up this keys to credit, or, credit to keys. We are wrapping up this video, and, we will also kind of have a link for a complete, like, fix your credit by your home guide with a lot of the things we talked about. So that link is going to be available, in the post, and you'll be able to get a copy of that. And also, like I said, reach out to an agent and lender partner that is going to guide you through the process and help you get to where you need to be step by step. So, any closing remarks
No, I just
for me?
appreciate the invite, and I look forward to the next one.
All right. Thank you, guys.
Okay, bye bye.
Bye bye.
Yo.